Good morning, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here. Now, in today's game plan, what we're going to look at is number one, economic data. We just got economic data out just about 30 minutes ago. Let's take a quick look at that. Jobless claims coming in at 229,000. Number one, nothing to see here, folks. That is a normal number. It is a very low number historically until we get above 250,000 in jobless claims or people filing for unemployment. There's really nothing to even be concerned about with the labor market. Now, that flies in the face of what Jerome Powell has said recently, which is very interesting. But again, jobless claims are people filing for unemployment, and historically, anything in the 220s, 230s, even 240s is really no sign of a labor market slowdown, and that is something we want to pay attention to. Now, the bigger news today was GDP. GDP, the second reading for second quarter GDP coming in at 3.3%, and that was stronger than the 3% estimate. So I would just pose this question to you guys. Should the Fed be cutting with the economy as strong as it is? And right now, we can take a look at the Fed Watch tool. In fact, let's jump over to our homepage here and scroll down on verifiedinvesting.com. Don't forget, folks, there's so much free data here, earnings. Here's your economic calendar. You have all these videos that are deep dives on charts, commodities, currencies, and so on and so forth, individual stocks, crypto, economic metrics, and so on there. But at the bottom here, we have our key Fed Watch tool. And the Fed Watch tool, again, if we click on that and bring that up, we can see that right now, the market is still pricing in an 85.3% cut or chance of a rate cut in September at the September 17th meeting. And by the way, that's only a little over 2 weeks away at this point. Now, we can see that as of now, the odds are 50-50 that the Fed won't be cutting again in October, but then in December, the odds are favoring a cut in December again. And again, just posing this to you guys is, again, should we be cutting with inflation going up? And obviously what we're seeing here in the data, does the data dictate a September cut? The markets right now are neutral to positive. That's after NVIDIA earnings, which we're going to be covering in just 1 minute. But essentially, think about this, folks. The Fed and the markets are saying, or at least the markets and investors are saying, we get our cake and we get it to eat it as well. And what I mean by that is the economic data continues to be decently strong, yet the Fed is saying they will start cutting rates. And that, again, is getting your cake and eating it as well, as the old adage goes. Okay, so that's where we are right now, folks. But first and foremost, as I always love to do, we're going to jump into our charts and take a look at where the S&P futures are. The S&P futures, this is where we closed yesterday. So you can see, again, we are slightly green on the day. Not much, though. In all fairness, that's only a slight up move. Overnight, we were down, or yesterday after hours. You can see the futures tumbling on the back of NVIDIA earnings. Now, NVIDIA earnings, for the most part, they were okay. But remember, when you have a stock that is at all-time highs, that's $4.5 trillion, that has led the market up, okay doesn't cut it. Okay. And so what we saw was they missed slightly on their data center revenue. And then they talked about China a little bit and so on and so forth. And the stock initially tumbled. Now it has come back. Why? Because we are seeing this insatiable buy the dip mentality and never go down market. Now, when you get in that type of market, it generally is the last portion of the market, and the technicals continue to point to a potential down move coming. But NVIDIA right now, basically around the flat line, barely negative. Now, this is going to be a potential trade for me, though. I am looking to short NVIDIA at the open historically, and we can flip over to the NVIDIA chart. A lot of times what you'll see is a stock kind of grind up from the early morning lighter volume, and then once the market opens, the institutions use that to sell into, and you might see it come down. Now, I'm not thinking we're going back to these lows at like 171, 172 yesterday, which was the initial flush, but I could see us going back to about 177 to 178, which was a lot of volume trading yesterday in the after hours. So again, we'll watch that very closely and see, but NVIDIA, again, is basically flat to just slightly negative on earnings, down 50 cents on the morning on the back of their earnings release. Now, daily chart. Daily chart was interesting, right? Yesterday, if you had asked me, and I talked about this even in my trading game plan right here, is I expected at least some sort of move. Now, I said you could push up into this resistance, retrace to the scene of the crime, um, and then ultimately roll over, or we could just start to sell. Now, where NVIDIA is currently trading is almost unchanged. Let's see where it goes today. But as long as we remain below this upsloping trend line, NVIDIA remains vulnerable to downside selling pressure. So just be aware, that's just what the technicals are showing us right now. We'll see when the market opens. Now, a couple other things to go over here. I do want to flip over to the S&P 500 daily chart. We remain inside of this little wedge pattern. And again, a wedge is where you have a much bigger move that gets tighter and tighter as the two trend lines converge. And we can see again that based on today, we'll be opening fractionally higher, like right here, basically just slightly up from yesterday. And ultimately, are we going to go to the high end here on the S&P, which would be around 65.40? Or are we going to start to sell off and retest the yellow line, which would be our fifth hit? And remember, fifth hits are a 60% chance of breaking, not overwhelming odds of a break, but it does favor it slightly. We'll obviously keep our eyes on that. All right, so that's the S&P 500. The NASDAQ 100 still remains inside of its parallel channel here. And again, as of now, the QQQ or NASDAQ is slated to open just slightly up, about 0.1%, just like the S&P. So same thing. If you yesterday again, and this is so interesting, is that who, by the way, who really gets hurt on NVIDIA not moving on earnings? Anyone who bought options expecting a big move, right? And so the premium people pay for those options, it just evaporates after earnings don't trigger a big move. And again, granted, it's still very early in the day, but we'll have to watch and see where this plays out. All right, so let's keep an eye on the QQQ. Right now, you basically could either go back up to the high end here, which would be a nice move higher, or if we break to the downside, then you start a bigger move to the downside there. Dollar today is showing signs of breaking this trend line again. It did briefly break over here on August 22nd, but it recaptured it before it was able to confirm the breakdown. And remember, folks, confirmation is a tactic that I came up with probably now it's about 15 years ago, and it has literally changed the way I trade because it tells you, again, if the probabilities tell you it is a real breakout or a fake out. And here you can see a close below, and it never confirmed, and then what happens? Boom, right back up. Now, if we close below today, let's watch tomorrow to see if it confirms that it's an actual break on the DXY. If it does, it starts favoring that bigger move to the downside here on the US dollar. All right, the 10-year yield, this one absolutely confirmed. And you can see again, here's your upsloping trend line, your downsloping or descending trend line, which created your wedge. Price got tighter and tighter. Big breakdown. Right here, you did confirm the breakdown, so it was a real breakdown. Then you got your classic retrace trying to get back to home base or the scene of the crime. And now, again, we're starting to see a little bit of a downside move of that bearish flag pattern playing out. Now, notice today here, if we flip to the 10-minute, the 10-year yield popped initially because of the stronger data, then came in, and it's creeping up again just ever so slightly. So again, the stronger the data, the economic data, the more likely interest rates stay up because there's likely less cuts by the Fed. But this move today on that strong data on GDP and jobless claims, it's not even close to a big move. I mean, literally, we're just kind of basically where we were trading right over here, right? I mean, this is all just chop. So it's a little bit up off of the lows of the day, not enough if we go back to the daily to make any difference here. Now, don't forget, guys, don't forget. So today we had GDP, second reading, but it was a little bit of a surprisingly strong number. We don't know how much of that was due to the tariff kind of craziness. In the first quarter, we were negative on GDP because everyone was freaking out about the tariffs that were coming. And then, remember, April 7th was the beginning of the second quarter, and the markets have just gone straight up. So you really had this resurgence. So we still don't know really where that reality is, but the number itself was strong on GDP. We'll have to see how things progress and obviously what we hear from the Fed. But PCE tomorrow, which is, again, it's a price index, It is the favored gauge of inflation for the Fed. Let's watch that tomorrow at 8:30. That will be the big number of the week. That's the biggest economic number. Nvidia obviously was the biggest earnings number of the week, although honestly at this point it's kind of a non-event, right? I think we can all agree unless Nvidia is up or down at least 3%, it's pretty much a non-event. All right, back into the charts. We got lots to cover. So again, number one, we looked at Nvidia's chart already. In fact, let's just jump back to Nvidia and just take a look at where that's trading. It is starting to come in a little bit here, but again, you can see yesterday after hours, the big dip. So it's still up pretty nicely overall, but again, coming in just ever so slightly. Now, Snowflake had remarkably good earnings. Look at this little area right here that I annotated on the chart or drew on the chart. It was right here at this 230 level. I want to show you why that level was so important. And look at how price is already pulling back on Snowflake. And if we flip over to the daily chart, look at this, guys. Zoom out. There's a gap fill right there at 230, right here. See this huge gap right there? Monster gap on Snowflake. And today or in the pre-market, we filled the gap and you're already seeing price come back in a little bit off of that. Now, the level, this is a zone. And I put zones in when you have a major level here and then you have a double top. You know, you basically this is a range. And so this is from 230 to 238. Again, you know, on a $200 stock, an $8 move is nothing crazy, but this is where you would expect major resistance on Snowflake today as a day trade. I'm sure we'll be watching and potentially trading this in the live day trading room. But you can see, again, Snowflake tagged to the 230 level in the pre-market, and now it's pulled back to 225. You can see the pre-market number right there. Now, CrowdStrike took a massive drop on earnings, then a huge resurgence, and is slowly faded here. The only level I have on CrowdStrike, there's a gap fill down here going back to April 17th, right? So you can see the gap there, and you had a gap here, and then you rallied all the way up. And then you have this upsloping ascending trend line connecting your August low to your April low. And so notice how those two levels merge right around 363, 362. And so again, you know, this would actually be a good swing trade level if price gets down there. I don't really expect it to get down there today, but if it gets down here in the next week or so, I actually think this would be a good swing trading opportunity. All right, so we'll keep an eye on that in the coming days. Day trading wise, if you're really aggressive, there would be a nice level around 393, which is not that far away. This pivot high, and you can see right through here as well. So 393 would be something to watch. HPQ, Hewlett Packard here, initially popped on earnings yesterday after hours, then dropped and has slowly been grinding up. If you look at where it closed yesterday, it's virtually unchanged. And so when something's unchanged, the odds of a trade are greatly reduced because you don't have a huge extension move that's creating emotion. And remember that as a technical trader, what we're doing when we're looking at resistance and support levels, so we short resistance and we buy support. And what we're looking for is really crazy moves, like a snowflake type move, right? Where price gets so out of whack that it creates panic or greed in an investor's or in the investing public. And what that does is it drives price beyond where it should be, like to the upside. It would go way beyond where fair value should be. And then we play that resistance because eventually that greed kind of cycles out and it pulls back. And same thing on the support side, where you have a big down move, it creates panic in the markets, in investors. They just panic and dump, which pushes something further than it should go. And then you get the rubber band effect where it snaps back. And that's, again, the key here with understanding essentially the counter trend trading on day trading of what we're looking to do. All right. So again, you're seeing a little bit of a pop on HPQ here, but still nothing crazy. Nutanix, big drop. This is a smaller company, by the way. Big drop on earnings that bounced and then kind of has come back in. Even this one, you know, again, closing at $70, trading at 64. We could look in case it dips. For me right here, there's an obvious level. First level would be a Pierce of $60, and then second level right here, another gap fill at 58.55. All right, so those would be the two levels there. Now, we did get earnings from Best Buy. Nothing going on here. Dollar General reported earnings as well. Popped initially, came back in. So we did get some retail numbers this morning, but overall, nothing major on those reports. Just kind of sitting back and being patient to see if they move more. Now let's go to Bitcoin, guys. And again, just so much to go over this morning. But Bitcoin's daily chart, we are getting a little bit of a bounce here. So now on the bounce, as we watch this bounce, the main thing we're going to continue to focus on is this trend, right? So this trend line, AKA trend, this has been broken. You got the retrace. It went lower. Now it's bouncing again. Notice you're making up to here, right? Low, higher low, higher low. And then all of a sudden, what did we do? Lower low, right? And so really you have to get back above and kind of reestablish back above this 120 to 121,000 level. Otherwise, the trend again, the uptrend, the higher lows has been broken. And so good bounce today on the back of, again, risk on environment, stocks, again, neutral to positive on the day. We had a little bit of an up day yesterday overall, but for the most part, you still want to remain a little bit more hesitant on Bitcoin, with downside still, in my opinion, down eventually to 100,000. 100,000 would be a big level on that. Taking a look at gold real quick. Gold is flat on the day. And again, we've seen it. Look at this new trend line I put in here. So we basically have what we would call a megaphone pattern developing. Megaphone is the opposite of a wedge, right? Wedges come together. Megaphones get further and further apart. But essentially, you would still assume. So here's that same. It's very similar to Bitcoin in a way that you have this longer term trend line here, this yellow line, this ascending trend line. You broke it, you retraced, you went down, and now you're kind of bouncing up. But the idea here is if gold breaks this white trend line right around 33.40, that would be your next leg down. Until then, you just probably chop within here. You could even go as high as this trend line. And then on the bullish side in the near term, if we were to get above these two trend lines, basically your all-time high, then it becomes a bull breakout, and it's just off to the races, probably to 3,800 on gold. But right now, as long as it remains below the ascending yellow trend line, you would remain slightly bearish, expecting potentially a little bit of near-term downside, even though mid to long-term remains very, very nice. Silver's inching up a little bit. Can silver push up into this key $39.85 to $40 level? That's going to be your big test for the bulls. Does it get rejected again like it's gotten rejected over and over and over and over again, and even over here? Or can it finally break through that and make a run maybe for $48 to $50, which would bring us back to those past major pivot highs? All right, so just something to watch there. Oil, let's take a look at oil here. Oil, a small uptick today. Really what we've got now is a trend line here, which is resistance on oil, trading around this $65.75 level. And then you have support down here at $60.65. And we're just in between those. So there's not much for me as a trader to do. I just have to remain on the sidelines and be patient for either a move up into resistance and see what shows there. Is it a good trade there? We'll see. Or does it fall into support and does it become a good buy? So again, resistance and support, those are your key levels to watch. And then lastly, natural gas here, and then we'll get into some questions. I always try to do a couple questions now so we can answer a few of your watching questions or watchers, viewer questions. But really on nat gas, we're just grinding up. Resistance will remain at $3. If it gets through there, you could get a little bit of a decent move up to about $3.22, this former little pivot area here. But right now, again, we still got to fight through the $3 level on the charts. All right, so this is where we are at this point, guys, continuing to kind of monitor and see where things are in the works. But I did want to get into some user or viewer questions. As always, guys, I love the questions you guys come up with. First question here is, how do you guys know where to look for supports? Do you use a scanner or some other way to find tickers to trade? That's a great question, and it's a question we get in the live day trading room all the time. So I don't use any scanners, but what I've done over the years of trading is I've accumulated a watch list of my own that basically are stocks that I watch. And generally what I do is I focus on the 5 to 10 billion or above crowd. And the reason why I look for trading opportunities in bigger companies. Now, listen, some of you guys love trading microcaps. That's fine. But for me, because I'm buying large amounts of stock, I need it to be very, very liquid, meaning that if I need to get out of that position, I have to be able to get out without, getting screwed essentially. And so number one, I've accumulated a watch list over time. Number two, when I wake up, there's a routine that I go through, and it's a very simple routine. I don't reinvent the wheel. Basically, what I do is I first grab my phone, half my eyes are like half open, you know how it is in the morning, and I look through, like what's moving, what's in my portfolio, is anything up big or up down, and then I flip on CNBC. And listen, I don't watch CNBC for the information. What I watch is the ticker at the bottom. The ticker at the bottom, if there's anything that's trading, if anything's moving big in the pre-market, chances are there's volume there and it's going across the ticker. And so I'll see like, oh, Nvidia's trading. Oh, Nvidia's only down $1 at this point or whatever. Okay, no big deal. I pass on it. Say, okay, I'll look at that later in the day. Then I look at, okay, wow, look at this. Snowflake's having a monster move. Okay, that mentally on my watch list, on my mental watch list, right? I'll be looking at that for a trading opportunity. And so that's really what I do on the day trading side. Then I come in, we have we have over 500 members in our live trading room. They're great because they're bringing things to our attention. We're bringing things. I have my other traders. We're always conversing. It's one of the great reasons why it's great to have a team of great traders. Whether it's just a team where you guys hang out, or it's someone like me that can point out things for you guys to look at for the trading day, or if you're in our room, you get the benefit of all of those things. And so there's a process you develop. Some people use scanners. That's great too. I just don't necessarily do that, but that's fine to do as well. All right, good question. Really good question. Next question here, and I only have take 3 questions today. Can you please give me an update on GEV and Netflix? Sure, let's take a look. Let's dive right into the Netflix chart here and take a look. So Netflix daily chart, you can see I've already have it annotated off because I've looked at this chart quite often. And what we can see here is there's an upsloping ascending trend line that is support on Netflix. Now, if this line breaks on Netflix at around 1210, you would see pretty much a quick drop, probably within a week or two, to about 1100. 1100 will be your next support. But again, you can see how on the upside, when Netflix was rallying, it kept on coming to this line and getting rejected. Finally, the rejection was a much larger rejection. Now we're getting a little bit of a bounce. Notice these two trend lines, these ascending trend lines, are almost parallel as well. But again, suffice it to say, right now it's holding support around this 1210 level, which gives it maybe a near-term upside move to gap fill at 1275. But at any time, if it breaches and confirms below this 1210 level, it should start heading down pretty quickly to about 1100. And then GEV is a great chart. This is GE Vernova. Look at how it's broken its long-term trend line. It broke here, and now it's bear flagging and respecting the scene of the crime. So technically, this would be a negative bias near term because it's broken the trend line with resistance at this yellow trend line. If it were to ever get back above, then you have to say, okay, it's back above this trend line. It's recaptured it. But until then, this to me looks like a bear flag that, again, is being rejected by the scene of the crime trend line, which was the former support, now resistance. And ultimately, eventually, you'd expect a rollover in that one. All right, one more question. Let's go through one more question, guys. I'm just kind of scanning these questions. Let's see here. The cocoa chart. The cocoa chart. We haven't looked at that in a while. Let's take a look at the cocoa chart here and see what we have on cocoa. This is a commodity. And by the way, a lot of you guys may say, hey, I don't care about cocoa. Why am I paying attention to cocoa? And the answer is very simple here, right? Is that remember, it's educational. So even if you don't trade something, learn from the chart, because all charts are very similar in that they are ruled by greed and fear. Now, cocoa, you can see, look at this beautiful downsloping descending trend line. It's kept price in check, but look, you also have an upsloping and flat area here, which is also in check. So price is getting squeezed in a wedge pattern. And the idea here is that at some point, we're either going to break down or break out of the wedge. Okay, and again, we can see that pretty clearly there. So basically, to me, this would be a no touch as a trading opportunity, but I'm going to be carefully watching as it gets tighter and tighter to see if there's any sort of sign of a breakout where we should get a big move up, or a breakdown. And if you break down, you're probably headed back to about 6,900 on the cash contract of cocoa. All right, so very cool stuff there, guys. And again, as always, folks, it's all about education and learning these verified investing my trading game plans. I hope they give you an insight into how I trade, how I look at charts, how I analyze charts. I try to educate. And then, as always, I love the questions coming in. So keep them coming, guys. I'll try to at least answer 3 a day. And maybe we'll just do one day where we just do all questions. If the markets are quiet or if they're closed, we can always do a day where it's all questions all the time. But as always, folks, I'm here for you. Remember that. I do this because you guys watch. Otherwise, I wouldn't be doing this. I'd just be trading and just focusing in on my own charts and my own account. So I'm glad I can share some of the knowledge that I've accumulated for 26 years. And as a thank you, as always, I'll be doing my best for you guys. Have a great rest of your day, guys. I'll talk to you soon. Take care.